All right, everyone, it's the weekend, and more than likely, this is going to be the longest video that I'm going to make of the year because there's a lot to go over. This right now is a live after hours chart of the market. The stock market closed right here, and right now, as you can see, it's selling off precipitously all the way down here following some insane terrorist attacks in France, in Paris, to be more accurate on Friday evening. So overall, not good at all. Not good. So with all this being said, this is why the market's selling off in basically oversold conditions, and it's pretty bad out there. However, yeah, overall, I really wasn't sure what I was going to say today following Friday's session, but I'm very apologetic. I feel like I failed everyone this week overall. This is by far, it took until November, first off, so congratulations, Mr. Market. You finally got me. But this past week was officially the worst week of the year I've gone through, as some bad decisions, missed trades, and just some bad luck. And I continue to say I've whatever, it is what it is. I've had bad luck my entire life. I've never really gotten lucky with anything. I've always had to work extremely hard, whether it was in sports, athletics, or just being able to accomplish anything, period, in life, including the stock market, to get good returns. It's always been basically skill based. It'd be nice to get some luck, and I assume that in time it's possible you can still flip a heads or tails 10 times in a row, and it can come up tails 10 times in a row, and then you can still be sure, hey, it's going to be heads next time. But, sometimes it comes up tails 11 times. So, it's always possible my luck can change, but yeah, if it wasn't for bad luck, I wouldn't have any luck at all, as the famous saying goes. But the worst choice I made all week long was following this weekend. First, let's go. The market, as you can see, sold off every day in the NASDAQ, and for the 5 days was down almost 5%. Very, very ugly. We were obviously basically fully invested coming into the week, and after Monday, because of all the long signals on Monday, which was the 9th, right? God, there were a lot of long signals on Monday, which started the major problem. I was then fully invested after Monday, and unfortunately, the market just died, completely died, and is continuing to sell off. And if you think we're really oversold, I got to show you that MACD says that, oh, well, we're not even at mid-range yet. TSV is not too bad, but we're not that oversold. And stochastics, not even close to being oversold, and RSI, not even close to being oversold. And that's also good for the S&P 500. So if you think that, oh my God, we're definitely not going any lower, we could easily keep going much lower. Now, I'm always ready for everything. I try to never let any preconceived notions of the future ever cloud the judgment of now. I try to live in the now when it comes to the overall market. Because basically, if a chart pattern presents itself, like earlier in this week, I didn't want to tell everybody, but internally, this kind of pattern makes me think, oh my gosh, maybe if we can get more like this pattern can build out sideways, things are going to work out great, because this is a pattern I've seen before. But for a pattern to work like it used to before 2008, you got to have the exact same traders with the exact same ideas, with the exact same traders that are going to come in to buy and sell later on in the exact same time. Basically, you'd have to exactly repeat the past into the now, and that's impossible. You can't do it. There's no rip in the space-time continuum that allows for that. So it's just not the same. So even though a technical pattern sets itself up like it does in the past, it doesn't mean it has to work, because you need the exact same players in the exact same time frame, and that's just impossible. So, but with Zixi kind of not working as it is, and with a lot of my stocks kind of weakening, this market could get worse. I mean, today's a technical distribution day, back-to-backers on heavier volume on the NASDAQ. Oddly enough, the volume's still below average on the NYSE, which just goes to show you how odd of a market we have here. Now, the move below key moving averages that the index were able to retake obviously negates our buy signal. We're back into a completely neutral signal, which means long positions need to be reduced, and more scrutiny is going to go into new long names. But the biggest disappointment out of all of this is what I wanted to get to, is that when we started the week, I came in with a bullish, basically, notion. This is what we looked like at the end of the week, thinking, my gosh, I could see us pulling back, but I can't see us undercutting these lows. Now, why couldn't I? That's the problem. Like, I should have, I could see us easily crashing. So you kind of want to see everything, but I really didn't think we would undercut these lows. I thought it would be an orderly pullback, and I was pretty good on the market. But then I read this. There's one short-term trader that I really respect. He writes online books. Actually, here's his books right here. It's Steve Burns. He's a great guy. He teaches new trader stuff. But this was his last weekend post. So I read this on Sunday after already coming to basically my conclusion about what's going to happen with the market. 10 facts about the SPY chart. And I look at his chart, and then all of a sudden I start reading it, and I'm just like, oh, this market's been absent a long-term trend, blah, blah. He's like, thanks primarily just big caps, which is true. The market's still not under accumulation. It's only back where it was in July and able to go to July 20 price highs. And I'm like, yeah, that's true. Some significant resistance. The recovery where we started before the 10% correction was something getting back to even for buy and hold investors and trend followers. I do not understand the overwhelming bullishness here after a year of flat returns of all the price action. I kind of thought he was being a curmudgeon there. I was like, maybe he doesn't see the individual because he trades the indexes. He doesn't focus on individual stocks. He clearly doesn't see what I see. He's like, the danger lies at the downside still. And I was like, that's okay. That's interesting. The MACD is close to a bearish crossover here, giving a short-term signal for good risk-reward ratios short trade. And so I started looking at MACD, and I'm like, damn. Doesn't get much higher than that, and it is about ready to roll over. And I respect the guy's methodology on the very short term. He's very, very short term. The SPY 70 RSI held on an end-of-day resistance on the chart as price tried to grind higher and failed. That is the case. Grinded higher. It's not really going anywhere, But, so I was like, blah, 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 spent 4 days in the trading range. It was breached intraday on Friday, the 10-day exponential moving average. I noticed that, so I was like, oh, okay, but all short-term stuff. I'll be taking the bearish MACD crossover as a short signal, and it worked out for me. Ended up covering, I think, yesterday. He could have held on for a bigger game, but like I said, he's very short-term. But, it was good analysis, and after reading that, it made me think, shit, maybe my analysis is a little too bullish, even though my charts do look bullish. I don't have any perfect charts, haven't received any perfect signals yet. Any stock that oh my God, 5%, 10% of my account capital in that one. Not one single signal, not one single perfect speculative chart set up that then immediately followed through. So there was a lot, left in my imagination, but still, it's a damn good move, and I could just see this just basing sideways. And then the worst mistake happened. This is what started it all, the downfall. Then on Monday, coming in on Monday, I get this signal, UVXY, clear hedge signal, confirmed with TVIX and I believe VIIX. Yep, so all of these names signaled. UVXY is the best looking one to me visually. So UVXY gives me a signal, but the same day I get a long signal in rate, hubs, loan, an ad signal in Zixi, and I'm like, well, I don't have much capital left. And with the amount of capital, the 332 and 1.5% that I put into those names, basically 10%, that's about how much cash I had. Instead of putting 5% into UVXY like this signal dictates, and then putting the remaining 5% split up into those 4 names, I instead invested the full amount of money just in those names because I started to believe that bullish bias, like this market's going to break. But this chart is clearly rounding out, and this is a clear signal. I posted in my new positions analysis how that this is a signal, but I'm treating it as the last of the name. If I had more money after the longs, I would take it. I've done this now twice. I believe I did this earlier this year in SRTY, and I got lucky. I got a signal here, didn't take it. Luckily, I got it on the pullback here, and I was long SRTY, and it paid off, thankfully. Almost missed it. So that was one time. Second time, if I fool me once, shame on you, fool me twice, I'm an idiot. So I'm an idiot. I passed on this signal, and what did it do? It rips higher now, and even after hours, I believe it's at 39 thanks to the Paris attack. And, in 4 days, 31% gain missed out. Okay, that's bad. Good news is also, AVXL did get shares to short, was able to short, but last night, then something else happened. SPHS had 22,000 shares ready to take short. IB had them last night. First they didn't have them, then randomly I see 22,000 shares. You can't reserve shares at IB. I go short this morning before the opening bell. No more shares. SPHS falls 18%. So I miss out on an 18% gain at 2.5% of my account capital. And now I miss out on a 31% gain on 5% of my account capital. And now the market's under a drawdown. So now I've lost a lot of gains off the highs. That hedge in UVXY would have eaten into that a lot. And then even more disappointing, I see that EROS, my forgotten short, where the orders were entered into the trading platform. All I had to do was press sell short, and it would be good to go. I left it on a separate tab, never went back there and totally forgot about it. And look at what it's done, down 77% in 1 month. After hours, a class action lawsuit was filed against them, and it's now down 80%. Talk about some mental anguish I'm going through right now. So EROS missed out 80% gain there. UVXY missed out on a 30% gain there. SPHS missed out on an 18% there. And I'm not quite sure what my drawdown is from the highs, but all of that would have definitely helped the drawdown. So overall, not a good day. So now let's just, and also let's not forget what happened to me yesterday. MLAB, my final sell stop was right below, what was it at? Is it right back here? My final sell stop, I can't remember. 106. Where? Can't remember where that was. I don't seem to be able to remember where I had that final sell stop. But basically, my final sell stop was like right around 105.50. Maybe it wasn't. I'm going to have to review. Okay, so MLab, I'm not sure anymore, but I believe that one of my sell stops were triggered. Oh, that's what it was. My sell stop was hit, and then the price that it triggered at was 105.52. Well, that's funny because the low of the day is 105.68. There are no prints at all at 105.52. So once again, these thin stocks, how they can screw you. I got my stop hit, and somehow I got sold at 105.52, even though the stock magically was never able to trade below 105.68 intraday. So I have that also happen to me this week, which isn't a big deal. And I'm still not going to fight it, but I'm going to ask IB, hey, what the hell happened, you know? And if they do give me a few cents back, if it's a small loss, doesn't matter. But bottom line, it's been a painful week. Learned a lot. The basic thing that we need to do now is raise our stops on our long positions. We want to make sure that we continue to keep our gains and or leave with tiny losses or break even on the positions. It's possible that we get a huge sell-off and then we rally higher the rest of the day Monday, and we're going to have more stops hit. It is what it is. Full sells, EEFT, it's a full goner, closing below yesterday's low a day. CTB, massive failure. That's an obvious goner. MNST is closed below that first sell stop level I had on a closing basis, so that's a 50% sell. WNS, I don't care if it's no volume or not, with the switch to neutral signal close below the 20-day moving average after we've been long for over a week without any price gains, is a sell signal. So WNS, 50% sell signal. DGII closing below the lows of the gap up day. That's a 50% sell signal. And ManH is closing below the 20-day moving average, volumes above average, so that's obviously a 50% sell signal. And DSS also below the 20-day moving average, 50% sell signal. Final sell stop obviously is today's low a day. And we actually do need to add to a hedge. The good news is our new hedge yesterday worked lovingly today, and it's actually giving a better long signal today, with a large surge in volume, a large surge in BOP, and excellent price action closing above the 50-day moving average near the high of the day. So that's a 2.5% add signal, as it was only in the price volume BOP scan. But also at the same time, getting long signals. VLRS is a CanSlim quality name. It is giving a long signal here near the 50-day moving average. This is 1% for CanSlim as an add signal, and then 0.5% for price volume BOP. First sell stop is below today's low a day, so we're moving right now up to where if it closes below the low of the signal date, that's half of it, so 1665, and then the final sell stop's 1580. But that's a nice pattern, but in this market, nice patterns sometimes get turned to shit, so don't marry it. And then HCKT earnings winner, it's giving an add signal to its earnings move as it consolidated for a day and now is closing above the high day of that previous consolidation day. That's only going to be 1% because it's CanSlim only. All right, everyone, this has been a very long video. Thank you for watching. Lesson learned, hopefully. Always take the hedge when you're nearly fully invested or fully invested and have an option between a hedge and more new long signals. Always take the hedge. That's the lesson learned from 2015, as this second time definitely was the charm.